Just a quick disclaimer, guys. Anything we discuss in this video, it's not a financial advice. Please do your own due diligence. I'm not suggesting any stocks, any commodities, any ETFs for you to buy, hold, or sell. This is just my personal opinion. Stock market is a very volatile business, so please do your own due diligence before you put your money into stock market. So let's move on to the video now. Thank you. When market fell, most people panic. They freeze, they sell, but a small group of investors see something completely different: opportunity. Hi, my name is Vikas, and welcome to Passive Income Magnet. Today, I want to show you why market downturn has historically been the best time to invest, and how those who stay calm when everyone is fearful often come out far ahead. Let's be honest, downturns are scary. I completely agree with that. Red charts, bad news, predictions of doom, everything is coming down, people are running away, blood on the street. Here's the truth: every major market crash in the history has eventually been followed by a recovery and then new all-time high. If you zoom out the entire market for a couple of decades, the long-term trend of the market is unmistakable upward. Let me share some of the examples. Let's go back in early 1930s. The stock market has crashed 90%, 90. People thought capitalism was collapsing. But here's what people did not realize. If you invested just $1,000 in US market at the bottom of the Great Depression, that investment would eventually grow into millions over the decades that follow. Not because of luck, because downturn creates undervalued opportunities. The second example is the dot-com crash of 2000. Dot-com bubble wiped out trillions of dollars. Tech stock collapse, companies disappeared overnight. But look at what happened next. Amazon fell 90% and then went on becoming the most valuable company in the world. Apple also struggled through 2000, then launched iPad, iPhone, and changed the history. The investor who invested during the crash, they did not just recover, they multiplied their wealth many times over. Then you have the example 3, year 2008. 2008 was one of the worst financial disasters in the history. Banks failed, housing collapsed, S&P dropped more than 50%. But here's what happened if you were invested at the bottom. Over the next decade, the market didn't just bounce back, it delivered the strongest bull run ever recorded. A $10,000 invested in 2009 grew up to $40,000 in 2019. And that's without picking the individual stocks. I'm talking about the broad market. Why do downturns create wealth building momentums? There are a couple of reasons. Because prices fell below the true value. Great companies go on sale. Fear pushes away short-term investors. Long-term investors get to buy more for less. It's like walking into your favorite store and seeing everything is on sale for 40% off. Except the store is the stock market. Smart investors don't try to time the bottom. They don't panic. And they don't sell out of fear. Instead, they stay consistent. Focus on long-term growth. Trust historical patterns. They buy quality companies or they invest in broader index funds. Downturns are not a signal to run away. They are signals to stay disciplined. So if you look at the big picture, every crash in the history has eventually become a chapter in a much bigger story, a story of resilience, innovation, and long-term growth. The market rewards patience. It rewards courage. It rewards those who stay invested when others are afraid. Next time you see the market dips, remember this: downturns aren't the end, they're the beginning of opportunity. Here's all I had to share with you guys. If you find it a little bit inspiring, please hit the like, subscribe, and share with someone who needs a little confidence in this volatile market, uncertain times. And remember, wealth isn't built in the momentum of comfort. It builds in a momentum of courage. That's all I wanted to share with you guys. Stay invested, look for the better opportunities, always buy good stuff. Thank you for watching. Stay invested. I see you in the next video. Bye for now.